Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq, coming to you live from Consensus in Austin, Texas. Joining me for this segment, we have Andy Baehr, managing director at CoinDesk Indices. Andy, it is great to see you.
It's great to see you. It's great to see you at Consensus.
Yes.
15,000 people. There's a lot of buzz.
It really is.
Yep.
And you know what? It's interesting. The sell May and go away mantra, certainly Bitcoin wasn't, and the rest of the digital asset space was not paying attention to that.
No, this was the thing I love being wrong about the most, right? A couple of weeks ago, everything seemed flat. When's the next news coming out? CPI number came out several weeks ago, then the news on the 19B4s with the SEC for Ether, which kind of reinvigorated hopes that we might see Ether ETFs, and just positive market sentiment. We're kind of within striking distance of Bitcoin's all-time high. Ether looks strong too, the rest of the market looks strong. 60 billion in Bitcoin ETFs out there. Whether you compare it to 2 weeks ago or 1 year ago, things look very, very strong right now.
Right, and you know what? The ecosystem continues to grow.
It sure does. This morning we had a press release come out from the New York Stock Exchange that CoinDesk Indices is partnering with the New York Stock Exchange to attempt to list index options, cash-settled index options that settle against XBX, the CoinDesk Bitcoin Price Index. Once approved, this would give investors around the world a way to trade options, a proper options market onshore, which would cash settle. So this is a fantastically important piece of market structure that exists in many other places, but not onshore in the United States. So we're really excited about this effort, and once regulatory approval happens, it's going to be a new chapter for crypto.
It certainly will be, and speaking of regulatory approval, there was a lot of news that came out last week as well in terms of a key bill getting passed in the House around framework for digital assets, and I think that's, you're starting to see the capital market system within the digital asset ecosystem really develop here.
You would think it's an election year if you didn't know any better, right? Whether that's just an election year hug from our elected representatives or really a mind shift, I hope it's the latter. But the bipartisan support for the FIT21 bill, the fact that the SAB 121 bill was overturned or acted against in Congress with bipartisan support is exciting. Certainly the ETFs have unlocked this kind of new normal where things are going to happen, whereas before they may not happen. So we're in a good space now. We hope to continue to count on bipartisan support for healthy regulation, and we'll see where we are at Consensus 2025.
Well, it's so interesting because FIT21, of course, the 21 stands for 21st century digital assets, but 21 also, it means something within the space as well. So it's kind of clever. I'm not quite sure that was the motive behind it, but
you find hidden meanings.
You certainly do.
You find hidden meanings, and hopefully they support and they make you feel good. They help you be even more patient because these things take a long time, but once they happen, the market structure is robust, the ice is thick, and people can really start to think about allocating more and more.
All right, Andy, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from Consensus. I'm Jill Malandrino, global markets reporter at Nasdaq.